Welcome to ForexGeniusPro.com. Introduction to Forex. Everything you need to know before you start investing. Let's start. Forex disclaimer. Trading Forex exchange on machine carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. The possibility exists that you could sustain a loss in excess to your investment. So before deciding to trade for exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubt. Any options, news, research, analysis, prices, or other information is provided as general market commentary. It does not constitute investment advice, and we will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information. For start, we should know what is Forex. Forex is the abbreviation of foreign exchange market, currency market, or FA. It is the market where one currency is traded for another one. For example, you go to Japan, you have to exchange your money to the Japanese yen, yes, to buy everything in Japan. You go to Europe, you must exchange for euro. It is the world's largest financial market in the world, with average daily turnover $5.5 trillion in 2014, and it is around $6 trillion in 2016. How to get profit from currency exchange? It is the simple step. You exchange one currency to get another one currency. The general concept is you sell at a high price and buy it at a low price. Example, you buy euro at a low price. When the price goes up, you make profit. It is the simple. It is the general concept. Sell high and buy low. Forex market comparison. Forex markets compared to the stock market, it is the biggest market, because New York Stock Exchange, it is $28 billion every daily turnover, with equity markets, future market also smaller than FX market. The advantage of Forex market: high liquidity. It is the ability for you to sell and buy currency immediately without waiting for your clients or for anyone to buy your transaction, to sell your transaction, because it is a daily turnover with $5.5 trillion. Low spread and transaction cost. You can invest with a very competitive spread, and it is represents for the cost of trading. It is controllable finance. It means that you can use stop loss and take profit to prevent your capital. For example, you invest $5,000, you can put a stop loss at $1,000 and take your profit with $2,000. The reason to use stop loss and take profit is to prevent your capital not to lose all your money that you invest. It is traded 24-hour days and 5 day a week, from Monday to Fridays. There's none fixed working place. You can trade anywhere you want, which you can access the internet. And the last one, it is very important for you because you have free practice account. After you learn how to trade it, how to invest in Forex market, we have a free practice account for you. We call demo account. At any company, they offers demo account for you to trade it, to learn the strategy, to apply what you have learned to the real market. So you can practice it until you can make profit in your demo account. Then you can start your real money. This is the symbol of currency. It is symbol. The first two letters stand for current country name, and the last one stand for currency name. The bid and the ask. What is the bid and the ask price? The bid is the price at which you can sell base currency, and the ask is the price at which you can buy base currency. And the difference between the bid and the ask is called spread, and it represents the cost of trading. Let's see the example: euros US dollar 1.3180 and 1.3182. The spread of euro is 0.0002, which costs you $20 per standard lot when you enter the market. And what is best currency? Best currency is always equal to 1, the currency equal to 1. So you can go back to see the quote price of euros and US dollar 1.3180. It means that 1 euro equal to $1.3180. Placing order. In Forex market we have two types of order. The first one is Forex market execution and pending order. The second one is pending orders. Market execution is price that you can see the current price and buy and sell at the current price. Pending order is another form of future planning. Future planning, it means that if you see the euro to go down, you want to buy it at the down price. Without take a look on your computer, you can use pending order. Let's see at the next step. Market execution. This is where you can buy, sell by the market, and buy by the market at the current price. And a pending order future plan, it has 4 functions: pending order with buy limit, sell limit, buy stop, and sell stop. And all these 4 types of function, we will see it at how to use platform. Stop loss. What is stop loss? Stop loss is used to prevent an excess loss on a position. Stop loss is where you can put it to protect your account, as we talk at the advantage of Forex, to prevent your money. You invest $5,000, you want to lose it only $200, $500. It is depend on your stop loss. And we also can see it at the video of how to use platform. And take profit, it is where you can put your take profits at a point that you want, and not important for you to look at the chart every hours. Important indicator of in MT4. 1. What is balance? As you can see, what is the balance? The balance is equal to the deposit plus profit or loss of closed transaction. Closed, and all the closed transaction we go to account history. So balance equal to deposit plus profit or loss of closed transaction. And number 2, equity. What is equity? Equity equal to balance plus profit or loss of floating transaction. What is floating transaction? Floating transaction, the transaction that is floating on the market, that you enter the market and not close it yet. This is the floating transaction, and you can see it at the side of your MT4 trade. And the closed transaction, we go to directly to closed account history. Number 3, margin. What is the margin? Margin is the money you enter the market. It is very simple. As you enter the market with 1 standard lot, it will cost you around $1,000 margin. For free margin equal to equity minus margin. Margin is money available to enter the market. Yes, free margin equal to equity minus margin. It is called money available to enter the market. And the last and margin levels. What is margin level? Margin level equal to equity over margins and multiplied by 100. It is the percentage. This is the margin level. You can equity over margin and multiple with 100. So it is show you the levels of risk. Margin level show you the level of risk. The much higher the margin level, the safer for your account trading. Some company they put a margin that stops margins, or we call margin call at 50%. So when your margin level reaches to 50%, your account will be automatically closed. Okay, thank you for watching introduction of Forex with Forex Genius Pro.